On the Spot with Michelle Makori is brought to you by Meld, the next generation decentralized global bank.
The BRICS bloc has launched its biggest expansion in its history, inviting 6 more countries to join the Emerging Market Alliance. Brazil, Russia, India, China, and South Africa have formally invited Argentina, Egypt, Ethiopia, Iran, the United Arab Emirates, and Saudi Arabia to join the group at the recent summit in Johannesburg, South Africa. South Africa's President Cyril Ramaphosa said that membership will take effect from the 1st of January 2024.
We have decided to invite the Argentine Republic, the Arab Republic of Egypt, the Federal Democratic Republic of Ethiopia, the Islamic Republic of Iran, the Kingdom of Saudi Arabia, and the United Arab Emirates to become full members of BRICS. The membership will take effect from the 1st of January 2024.
South Africa's President Ramaphosa also said that now that consensus has been reached on the first phase of this expansion process, further phases will follow to include even more countries. China's President Xi Jinping called the bloc's expansion historic, saying that they will continue to unite and cooperate with developing countries. And Russia's President Vladimir Putin welcomed the new members via video link and called on the bloc to deepen its economic ties, including creating a common currency. And leading up to the summit, there was much speculation that the agenda would include discussion about a new reserve bloc currency, potentially backed by commodities. And while that was put on the back burner at this meeting, it was announced that next year's summit will focus on that initiative. Russia will be hosting next year's summit and has been one of the biggest proponents of the bloc currency to potentially rival the dollar. And moving away from the dollar and using the BRICS' own currencies continued to be a very big theme of this summit.
We have noted that there is global momentum for the use of local currencies, alternative financial arrangements, and alternative payment systems. As BRICS, we are ready to explore opportunities for improving the stability, reliability, and fairness of the global financial architecture. In this regard, BRICS leaders have tasked their finance ministers and central bank governors, as appropriate, to consider the issue of local currencies, payment instruments, and platforms, and to report back to the BRICS leaders by the next summit.
So what do these developments mean for the dollar, for the current monetary system, and for gold? Let's discuss with one of the first people to flag this trend at large. Willem Middelkoop is the founder of the Commodity Discovery Fund. He is the author of several best-selling books, including The Big Reset, which has been translated into several languages, including Arab and Chinese, and the upcoming book, The BRICS Reset. Willem, very good to have you back with us.
Well, thanks for the invitation. Good to see you again.
All right, much to discuss. Obviously, the big news here, Willem, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates invited to join the BRICS. But before we get into the significance at large here, I did notice that all of these countries, except for Saudi Arabia, fully accepted the invitation. We did seem to get a more nuanced response from the Saudis, with a foreign minister there, Prince Faisal bin Farhan, telling Saudi television that the kingdom was awaiting the details on the nature of the membership and its components. And based on that and our internal procedures, we will take the appropriate decision. So it was kind of interesting to me that we got a more nuanced answer from the Kingdom of Saudi Arabia. What do you make of that? Does this mean that the Saudis may not join?
No, I'm not that surprised by that response because, as you know, the Saudis have the petrodollar deal since 1974, when the US needed to find support for the US dollar after they took the dollar off the gold standard a few years earlier in 1971. And this petrodollar deal with the Saudis was so important, is so important for the US. So the Saudis, they know they have to play both sides. They still want to keep to keep the US as a friend. So they have to play that they're still not sure. But the Saudi Arabia wouldn't have been mentioned in this statement coming from South Africa when the Saudis wouldn't have agreed that they would have been named. So it's a sign. There's some very serious. There have been some very serious talks between the BRICS alliance and the Saudis, and never forget that a few years ago. We've seen the Saudi leader making a high five with Putin during a G20 conference. So this friendship, this has been a few years in the making.
Right. Okay. So I get that the Saudis are perhaps being a little bit more cautious, indicating that they're being a little bit more careful in considering this invitation. But it looks like that they accept. But does them accepting necessarily mean that action will be taken with regards to the petrodollar?
Well, actually, the petrodollar deal is already finished, one could say, because what was at the core of the petrodollar deal, that was the pledge by the Saudis and other OPEC countries that they would only sell their oil for dollars. So only sell the oil for dollars. And that's what actually happened since 1974. And we've seen a few countries starting to sell the oil in euros, like Saddam Hussein tried to do in the 1990s. Gaddafi tried to work on a Pan-African coin connected to gold. Well, we know what happened to these guys. So what's very significant now, and I think that's the core of this whole BRICS development, that these independent countries, they feel strong, they understand once they're united, and they're united they're fed up with the Western double standards, they're fed up with the Western hypocrisy, they're fed up with the Western exploitation of Africa and Latin America for such a long time, maybe for hundreds of years. And now they feel strong because they see when they can unite their forces and speak with one tongue, they are building a very powerful anti-Western alliance, and it's more an anti-dollar alliance. And I think there's a reason for the US to get a bit worried. But this won't mean that the dollar will collapse within 12 months. But it all fits within this picture that we're living in the last phase of the international monetary system centered around the dollar. That's why I wrote The Big Reset in 2013, predicting that around 2020 we would see huge changes coming to the international monetary system. I think this all fits in that picture.
Okay, and before we get into the bigger picture and the bigger significance of this and how you see that playing out, I do again want to focus just more on the oil side of this equation. This is a very big coup for China, which was pushing for this. As we know, Beijing helped facilitate the resumption of diplomatic ties between Iran and the Saudis, arch nemesis for years. Yeah. And Beijing steps in and they resume diplomatic relations. And now we have Iran, potentially the Saudis, along with the United Arab Emirates in this alliance, the major oil importers of the world. Now, prior to this expansion, I believe the BRICS members were in control of around 20% of global oil output. That's according to ING. And now with the Saudis, the UAE and Iran joining, that number goes up to at least 42% of global oil. That is rather significant, Willem. So assuming that they do all come on and join and do decide to actively move away from the petrodollar, what are the implications here? And do you see that as a real possibility?
Yeah, we've seen the first deals in which oil has been sold by the Saudis and other countries as well in non-dollar currencies. So they've done deals with China and with India in which the dollar was sold in the Chinese currency. We've seen deals between Russia and India in which the India paid with rupee. So we have seen the start of this move away from the dollar in international trade. And if you study the last numbers of global trade, the Chinese renminbi is global trade is being done in Chinese renminbi in 5% of all trades. A few years ago, this was just 1%. So you see the number of deals being done in the Chinese currency going up. The number of deals being done in dollars, of course, is still around 90%, but it's decreasing. So we see the start of this trend. I think it's a big trend. These countries feel now united in their almost disgust of the Western system, and they feel strong. And I think that there's a potential powerful alliance which they're starting to build. And don't forget that there have been 140 countries who didn't join the Western sanctions against Russia. All of the countries in Middle America and Latin America and Africa and the Middle East, most in Asia, they don't have sanctions on Russia. And many of these countries are now thinking about joining the BRICS alliance.
Right. And before we get into the feasibility of this alliance and how much these countries may have in common and how this could actually work, I just want to hone in on this petrodollar idea, Willem, because do you see an official declaration? Do you see some kind of big, clear, explicit statement saying no? You see it as a more subtle development.
It's not needed because, like I said in one of the previous answers, the petrodollar deal was the pledge that oil would only be sold in dollars. And now oil is sold in other currencies as well. It is the end of the petrodollar deal effectively because...
Does it matter, Willem, that it's still sort of denominated in dollars, that the price that then they decide they need to get paid for in other currencies reverts back to what you would be paying for it in dollars?
I live in Europe. And we had this very interesting situation here after the start of the Ukraine war. Putin said, I still want to, send my oil and gas to Europe, but you have to pay in ruble, gold, or Bitcoin. And then we in the West, the European countries, decided not to accept this. And that's why Putin stopped sending oil and gas to Europe. So there was a move away from the dollar, and we as Western countries were a bit arrogant and said, well, we don't accept it. And that's why my energy bill and all of my friends, has doubled over the last 18 months.
But they're still using the dollar as the denominator in the sense that you're saying, okay, well, crude is, for argument's sake, $80 per barrel. That is the equivalent of X in renminbi, X in rubles. It's still the base by which the calculation for the price of oil is made. Does that have any relevance in terms of longevity there?
Yeah, and that's why it was so important to learn if the BRICS would start to introduce a BRICS currency,
right?
Maybe gold-backed or commodity-backed, because once they have this common currency, and I think it will take a lot more time to develop this common currency, but once this common currency is around, you could see some serious competition for the dollar for the commodity trade. And this is more the longer-term plan, I think, for the BRICS alliance. So it's not a short-term plan, it's a longer-term plan.
Right. Well, they did say that would be the focus of the following summit. And leading into this particular meeting, there was much speculation that this would be high on the agenda, discussion about a common block currency, potentially backed by commodities, as you said. But we're going to unpack that a little bit further. But first, I want to focus on the other countries joining this alliance. We've discussed the significance of the oil-producing countries, but what do you make of Argentina and Egypt? What do they bring to the party here?
Well, of course, all of these countries, each of these countries has its own priorities, has its own agenda. But there's some common ground. Like I said before, they are fed up with the West. They always point to the fact that there were no sanctions applied to the US when the US invaded Iraq or Afghanistan. So the Western double standards, they really are done with that. They're also done with the IMF and the World Bank. They know that the IMF and the World Bank were introduced shortly after Bretton Woods in 1944, and this was a Western system. This was a dollar-based system. The voting rights within the IMF, a small country like Belgium, had more voting rights in the IMF than Brazil. So this clearly shows that the system which we built after the Second World War, which the US built after the Second World War, it's almost 80 years later, and that's very interesting because you might know the book The Fourth Turning by Neil Howe, and he explains that every 80 years you have these big shifts in the system. And now almost 80 years later, you see the joining forces of these independent countries who are willing to change the system. And that's what they say. We want to build a more honest trading system, financial system. We want to build a more honest common currency. And of course, the jury is still out if they will succeed. And the US and the dollar won't go down without a fight. But I think this is for the very first time since we had the bloc of communist countries right after the Second World War that the West and that the US is confronted by a very powerful alliance, a potential powerful alliance. It's also a numbers game. If you look at the BRICS economy, the BRICS GDP is already larger than the G7 economy. And if you look at all people living in the 140 countries not joining in the Western sanctions, you talk 6 billion people.
Right. Well, a new honest system, I guess some people would take objection to the term honest here. That's maybe a subjective, but I get it from the BRICS perspective.
From their point of view. From
their point of view, they definitely have made it clear that regardless of this common reserve currency idea, which we'll focus on in a little bit, they do want to push this idea of de-dollarization. That was one of the bigger goals going into the summit, and it seems to be one of the big goals ending the summit, that they really want to push this idea of not using the dollar for trade and using their own currencies. Dollar hasn't really moved much on this news, Willem. I mean, what do we make of that? Gold hasn't moved much on this news. Dollar hasn't moved much on this news. Is the system dismissing this? How much of a threat is this? How viable is this?
I always tell people not to watch the daily moves on forex markets, FX markets, or gold to look for clues, because there are many games being played in the market. But what was intriguing, actually, when the Russians leaked the story that a BRICS currency would be presented during this conference, that was early July, we saw a quite strong reaction in the dollar. It went down for a few days, and then it recovered after, countries like India said that it was too early to start a common currency. But we see, I wouldn't be surprised when we see the dollar topping in the near term, in the next week or 10 days. And then it will be very interesting to see what will happen to the dollar, because you have this economic challenging times in the US now. There's a recession in Europe. There's a recession, we're on the verge of a recession in the US as well. So the dollar might go down later this year, and that might kickstart the new rally for the precious metals as well. So that wouldn't surprise me at all. And then we could have this move for gold back to $2,000 and above that.
So what do you see really happening come January 2024 when it's the BRICS plus 6? Assuming they're all joined and we have 11 BRICS members, what do you see happening? How significant would that be?
Well, I always like to read the research put out by Zoltán Pozsar. Zoltán Pozsar used to work with Credit Suisse. He just started his own shop. And he was actually the first who started writing about the rise of this BRICS alliance. And he published a piece of research just 2 weeks after Russia invaded Ukraine. And he said, we're witnessing the start of Bretton Woods 3.0. Of course, Bretton Woods 1.0 was 1944. Bretton Woods 2.0 was Nixon taking the dollar off the gold standard. And he wrote, this is the start of a new monetary system coming from the East, centered around gold and commodities. And he also said that the Chinese central bank is now the central bank of all commodities because they can play the arbitrage with all the Russian commodities. And I think his analysis, you can find it online, you can find the PDFs there. I think there are 5 pieces of research he published over the last 12 months. And I think he's spot on, and he understands what is developing here. So if this is the start of Bretton Woods 3.0, if this is the start of a new monetary system centered around gold and commodities, that's the most important topic of the last few decades.
And you do believe that this is the start, that the idea is to first expand the bloc, as it seems to have been, and then bring up this currency idea?
Because they haven't been talking about this just for the last few months or quarters.
Sure,
but if you study it, I've been doing quite a bit of research on this topic because I started writing a book on this whole thesis, and then you learn that right after the start of the great financial crisis, after the crash of Lehman, Russia contacted China and proposed to bring the US down by selling all their gold holdings together. The Chinese listened to the Russians, but the Chinese contacted the Federal Reserve and their US partners. And China has played both sides ever since. But China has been very vocal since the Lehman crisis that they want to see changes coming to the international monetary system. And that's something I wrote quite a lot about in The Big Reset, which can be downloaded for free at our website if people are interested. So this has been coming for quite a long time. China and Russia have been meeting for over a decade. We know President Xi and President Putin had over 40 meetings one-on-one to discuss these kind of developments. So I think they have a long-term plan. Chinese are long-term thinkers. So this don't expect everything to happen in the next 12 months. But if we look back 5 or 10 years from now, we'll conclude, well, quite a bit has changed.
Yes, it does seem as though they are putting the pieces in place, setting up the chessboard to their advantage. Now, I did read The Big Reset ahead of our previous interview, cited it in that interview. It's a fantastic book, exceptionally well-sourced, and I'm going to include the link to our previous interview in the description of this one. Now, in that book, you use examples, you cite historical records, you really do break things down with facts to support your thesis. It was very eye-opening to see how central banks have in the past acknowledged actively manipulating gold. So definitely worth a read. But let's focus a little bit more on the block currency that's being discussed. As we said, prior to the summit, there was a lot of buzz that would be high on the agenda. Moscow was pushing this idea that we're going to have a commodity-backed currency, potentially backed by gold and oil coming from the BRICS. Then the South African ambassador poured cold water on that idea, saying it wasn't going to be discussed at the summit and that there wasn't even a real plan for a common currency. But as we just mentioned, it does seem like it will be a big topic for next year. And Brazil's president has certainly been one of the biggest supporters of this idea, saying that they need it to reduce their exposure to the US dollar and that a BRICS currency, and I'm quoting him here, increases our payment options and reduces our vulnerabilities. So assuming this is indeed on the agenda next year, and next year we will have the BRICS plus 6, so 11 members, what do you expect? What does this currency look like?
I think from the start it will be a settlement currency. So when you trade, you have at the end of the year, or at the end of the month, or at the end of the quarter, you have a net balance. You have a positive trade number or a negative trade number in the bilateral trades, and you can settle that in a system through maybe the BRICS Bank. Not many people are aware that we already have a BRICS Bank in operation. It's the new development bank. It's headquartered in Shanghai. It's run by Mrs. Rousseff, who is a former Brazilian president. And what's very interesting, if you look at the pictures of the summit in Johannesburg, you see 5 countries, the president of 5 countries. Well, Putin wasn't there. We had Mr. Lavrov, but the 5 countries were present in the room, and they were sitting in this circle. But there was a 6th table between them, and Mrs. Rousseff was sitting there. It was a bit smaller table. So the BRICS Bank was situated in that room as like the new IMF. When the Bretton Woods conference was held in 1944, they agreed that they would build a new bank, a new world bank, and they will build a new monetary center, and that was the IMF. And the Chinese have been very clear about this for years, that they wanted to build this new development bank, which we can call the BRICS Bank, and we can settle international trade through this BRICS Bank, headquartered in Shanghai. And if you have a common currency, the international global trade, the bilateral trade, can become much easier. You can avoid the dollar all the way, but it's already possible to settle trade, bilateral trade, through this new development bank headquartered in Shanghai. And that's a central piece of China's plan for the BRICS alliance.
Okay, but so far, this new development bank, Willem, hasn't really been such a success. It was founded, as you quite rightly said, back in 2014. They did launch it. In its founding agreement, it was said that operations would provide financing in the local currency of the country in which the operation takes place. But to date, the bank remains heavily dependent on the dollar up until this year so far. Local currencies, I believe, representing only 22% of the bank's portfolio. So there's they have been using the dollar even within this bank so far. And it links back to a bigger issue. And that's great that they may want to do this for themselves. I can see why that would be an attractive proposition for them. But, you know, we've had guests on the show that say you got to separate desire from ability. Yeah. And we've seen previous attempts not materializing, like the bank, like this big idea of developing a BRICS credit rating agency. There was also a BRICS undersea cable idea that they had planned that didn't materialize. What makes you think that they'd be able to do it this time then? Well, the jury is still out. And of course, there are a lot of critics out there who say this is an alliance of losers. Look who's there, you know, Iran, Venezuela, and Russia, and all what. Well, Venezuela's not in this one. Oh, sorry, no, but there have been talks that Venezuela would become part of this as well. So some. I even calling this like an axis of evil, and you know, all these countries who are not democratic. But as Zoltan Pozsar has written so beautiful in his pieces of research, and like I said, he's an analyst. He used to work for the Federal Reserve. He used to be the analyst for Credit Suisse. So he is working on the highest levels of this of the current international monetary system. And when he calls this the start of Bretton Woods 3.0, I think you shouldn't make the mistake to not look at this very serious. Well, we have this talk now, we take it serious, but if you look at the Western media, if you look at the media reports of the last few days, there's hardly any serious coverage of this. And I think that a few years from now,
people will say we should have taken this whole development more serious, because it's the first time since we had this communist Soviet bloc in the 60s and the 70s. It all failed in the late 80s. But this is the first time we have so many countries united in an effort to really build something competitive to the Western system.
But are they that united? How much consensus is there on a bigger strategy? Keeping in mind that the more members you have, the harder it is to reach agreement. I know that India leading up to this seemed to be more on the fence, not a big fan of this reserve currency idea initially.
Michelle,
you go ahead.
At the start of something new, you always have a lot of competition. I've been reading about the early days of the Bretton Woods conference the last weekend, and there were two plans on the table at the Bretton Woods conference. One was the dollar plan by the US, the other was the Bancor plans by Keynes coming from the UK. There was huge criticism from Europe, from France, from de Gaulle against the dollar plan. So we've seen the start of the Bretton Woods system is fairly similar what we see now. So it starts with this great and broad vision by a country who is leading. At that time, it was the US, who understood when they would win the Second World War, they could, become world's hegemon. And now we have China, who understands they're so powerful. And the Chinese understand when they can use their currency to buy stuff worldwide, just like the US has done since 1944, the Chinese can become the most, powerful country and the most wealthy country on earth. And there's so many countries in this BRICS alliance and who want to join the BRICS alliance who are in need of money. So when China can give them cheap loans, like the US has done with the IMF and World Bank, the Chinese have studied the American playbook from the 1940s and 50s very well. And the Chinese understand when they can pull this off, they can become very, very powerful. And there are so many countries who are willing to work together with China. And don't forget, most of these countries have China as their largest trading partner for years. I always show a graph in my presentation showing the number of countries who had the US as largest trading partner in 2000 and the number of countries who have the US now as largest trading partner. It all pivoted, most of these countries pivoted to China. China is the main trading partner for most of these independent countries who don't join us in the sanctions on Russia.
So in terms of how this works, you see China taking the leadership role. You don't see an equal power sharing, or how do you envision the power sharing? I mean, surely Ethiopia doesn't have the same sway as China in this alliance. So how do you think they sort of structure the power dynamics?
The Chinese are very smart to present this like an alliance of equal partners. If you look at the pictures from this conference room, it's like a circle. Nobody's sitting at the head of the group. You know, they all have the same size there. But of course, China is leading. China is the largest economy. It is a clear leader of this alliance, and I think China is also using countries like Russia in a way. Putin was using the Wagner Group to reach his goals. So I think the Chinese played very smart, and the Chinese, they support Russia in a way which makes them still a reliable partner also for the West. So they don't send their soldiers over to fight in Ukraine. They don't send their tanks to the Ukraine, but they support Russia financially, but I think China is using Russia in a way, and one day the Chinese could decide that they don't need Putin anymore.
Well, that opens up a whole other conversation. Before we get into the stability of Russia and Putin and the dynamic with Ukraine, and as you just mentioned, Wagner, I want to focus on the fact that, China is seemingly having some own issues with its own economy, right?
Sure.
It's having some major cracks happening within its own economy. So how does that fit into this picture?
Well, I think because of their own economic problems, there's more pressure on President Xi and on China as a country to really start to roll out this whole BRICS alliance idea. Because, as I said, when China is able to use its own currency to trade worldwide and to buy commodities, they're in a much more powerful situation. So the economic downturn in China increases the pressure on the leadership to come up with some creative solutions. And I think they understand it very well how they can, if they play this well, they can become much more strong and powerful in their competition with the US. Because, of course, there's not a kinetic war between the US and China, but there is a financial economic war. And China understands that the US wants to bring down China like they wanted to bring down Russia. And that's also the reason I think China is supporting Russia in the way they've been doing that for the last few years. They understand that they have, in a way, a common enemy.
Well, let's bring it to the kinetic war that Russia is currently involved in against Ukraine, which many have said is a proxy war for the West, considering the amount of financial and military aid that the US and other countries have been giving to Ukraine. How does this impact things if there is a conclusive ending to that war, which does not see Russia victorious? And keeping in mind that there's a lot of domestic strife within Russia itself, that's also another factor I'd like to get your thoughts on.
Yeah, what always strikes me when you study geopolitics, it has been clear that almost for 100 years, the leading thinkers in the world of geopolitics coming from the US have always pointed that that whoever controls the Ukraine controls Europe, controls the Eurasian landmass. So the US have always been very clear that they need to have a very strong presence in that part of the world. And there's this wonderful book, you can find it online, the PDF is to be found on the internet. Brzezinski wrote the book, The Grand Chessboard, explaining why the US always needed to make sure that there was a lot of trouble on the Eurasian continent to be able to control that part of the world and to make sure that the people living on the Eurasian landmass, which runs from Rotterdam here in the Netherlands to Vladivostok in the east, that's 4 billion people. If they can live and trade happily with each other, we don't need the US anymore. So there's a very strong reason for the US to cause trouble in that part of the world, like the US also had very good reasons to cause trouble in the Middle East. And I think you can't understand a situation like the Ukraine or a situation like Syria or Iraq. You can't understand that well enough when you don't understand these larger geopolitical games which are being played.
Does it change anything if Ukraine is definitively victorious against Russia in this conflict?
For the US?
For this agenda, for this de-dollarization agenda, for this BRICS expansion, for this block currency?
From this American geopolitical point of view, it's essential that the Ukraine will win this war. Because, like I said, if we lose Ukraine, we could have a development in which Russia feels strong enough to also start to act against other countries in that region. So for the US to be able to preserve the current dollar system, to be able to be the most powerful country in this system, and to be leading in a financial economic from a financial economic point of view, is essential. That we need to win this war, and that also explains why there's so much pressure on the Ukraine and why we're sending so much of our military stuff to the Ukraine to help them to win this war.
Well, that's just it, Willem. If you're saying that this is all part of a bigger play in motion, you expand the bloc, and then when you have the bloc at a sufficiently big and domineering size, you then launch this currency. I mean, surely the US is not just going to sit and watch the dollar be attacked like this, right? Surely there's going to be more reaction, more kind of pushback from the United States and perhaps some of its allies.
Well, that's why some experts say that the current fight against Russia through the proxy war in the Ukraine is a fight for survival for the American dollar system, and in a way, the US needs to make sure that there's not a country becoming powerful enough to compete with the US on a global level. And that's why the US is having this financial economic war against China. And we've seen some generals in the US starting to warn that the US is heading for war with China. And we've seen President Xi warning his generals to prepare for war as well, because China understands that the whole development around this BRICS alliance is potentially very dangerous for the US. So the US won't go down without a fight. And that's the biggest risk for maybe all of us nowadays, that this fight between Russia and China might become kinetic one day.
Between the US and China, not Russia and China.
Sorry, between the US and China.
Well, Willem, last time you and I chatted was, I believe, in March of 2022, and you were very early on in spotting this trend of the bifurcation of the global monetary system, which we are seeing growing and accelerating. And you said back then that World War III had already started. So given what you've just said, where are we in World War III, and how do you see it intensifying? How do you see it playing out?
This BRICS conference is like a next step in a financial economic war between the Western alliance and what I call the independent countries, or in the media is called the global South. And I'm afraid it's all connected. And I'm not the only one who has warned for a possible World War III scenario. We have even had warnings coming from the Vatican, from the Pope. We had warnings coming from the Serbian president, because what we've seen on the Balkans, we've had awful wars on the Balkans a few decades ago. And tensions are heating up there as well. We haven't discussed Africa. There are huge tensions in Africa, where the Wagner Group is even exploiting gold mines. They have their private army helping some of the revolutions in the heart of Africa.
Well, the Wagner Group has just lost its leader, Willem.
Yeah.
So in a plane crash, in a plane accident, which we know was no accident, which believes to have been shot down, most likely by Russians. Speculation, but even American intelligence agencies are saying that it's more likely than not that this was not a crash at this stage. And we know that the leader of the Wagner Group, Prigozhin, was in fact leading what appeared to be a coup against Putin about 2 months ago. So how does this fit into all of this, if it does?
Yeah, well, you could say there's some kind of power struggle ongoing in Russia itself. It might have reached the Kremlin, so that's very worrying. We also know that Putin used the private army of the Wagner Group, to act on his behalf in different parts of the world. Like I said, the Wagner Group has a very large presence in some countries in Africa. They exploit even gold mines in Sudan and in other countries. They're active now in the heart of Africa, where we've seen some of the revolutions. What will happen to these operations, nobody knows. But the world is getting less stable. Russia is getting less stable. We see problems in China. We have a very tense situation in the US itself with the upcoming elections and now former President Trump having all these legal trouble. We have a lot of trouble in Europe. The European industry was very negatively affected by the high energy prices. So we have quite a lot of troubles, and I'm afraid that we first will enter some more uncertainty before things get more stable. And what we've seen with the BRICS conference of this week is increasing the uncertainty and is increasing the tension between the Western Bloc and the Eastern Bloc.
Well, that's just it, right? If you say that this is an escalation in World War III, at least on the economic and financial front, which it does appear to be, what does it mean in terms of immediate reaction? Do you see any kind of immediate pushback reaction from the US beyond the war in Ukraine and that potentially being a proxy conflict? Do you see any immediate reaction to what you say is a clear escalation?
Well, I'm afraid that the buildup of power and military presence by the US in the South China Sea around Taiwan is telling. There was even this joint Navy exercise, I think, by the UK, Australia and the US, while the BRICS conference was being held this week in South Africa. They had this joint naval exercise. We see joint naval exercise by the Russian and the Chinese navies. And even the South African Navy has joined in exercise as well.
Yeah.
So I don't feel comfortable by all these developments. And we shouldn't call it World War III right away, but we're moving towards a very dangerous phase. We had this great globalization trend. Well, that has clearly stopped. We're in a deglobalization trend. And I'm afraid that when this continues, we all might lose instead of we all might win. And in the last chapter, in the epilogue of the Big Reset, I wrote that we have two scenarios. The positive one is that we all join forces and we'll move away from the current dollar system towards a new phase for the international monetary system in a peaceful way. But I also had this other scenario in which I said we could have war because wars have been fought for less important topics.
Yeah, definitely wars have been fought for far less. So let's bring this back to the Big Reset, which again was an idea that you were ahead of, I believe, as early as 2014. You started to see cracks in the monetary system and the role of gold in this reset. Bring it back to how gold fits into this picture and the Big Reset.
Yeah, I came up with this idea because my first book was published in 2007, just before Lehman. I warned for a pending crisis because we had this mountain of debt. Then we had the great financial crisis. We started after the fall of Lehman. And then I was always asked that how can we solve this system? How can we solve these problems? And at first, I didn't have a good answer, but I started to study the system more and more and learned that you can change an international monetary system. International monetary system is man-made, so it's possible to change it. And that's why I wrote The Big Reset. And the thesis was that we could move away from a dollar-centered system towards a new phase for the international monetary system where we could use, let's say, a new common currency. We could use the SDR, that's the currency basket of the IMF. And I also explained in that book that we needed debt restructurings because we have this mountain of debt. And it might be a good idea to restructure the debt and then revalue gold, because all central banks worldwide have huge amounts of gold. This goes for China, Russia, the EU, and the US. So when you revalue gold to a much higher level, you can save central bank balance sheets. And I still expect that to happen one day.
Okay, but break down how this goes into this idea of a gold-backed currency, which is part of the big reset. How do you see this current scenario playing out? Did the BRICS launch their own reserve currency backed by gold, maybe a basket of commodities, and that forces the West to do the same? How do you see it really leading to the reset?
Well, in The Big Reset, I wrote about a scenario that the US could surprise everybody by making the dollar gold backed again. And I even a quote from official Chinese cables being sent from the Chinese embassy in the US to Beijing, in which the Chinese have been warning that could happen. And that could be of risk for China because they hold these US treasuries. The Chinese stopped buying US treasuries around 2011, 2012. Russia sold all its US treasuries. And you see that countries like Russia and China, and actually all countries east of Germany, have been accumulating large amounts of physical gold. And this is a sign in itself because it clearly shows that countries expect something will happen within the monetary system. And even the Dutch central bank president has said that the Dutch still have a lot of gold because you need gold to restart the system when something goes wrong. But like I explained before, if you work together, if we all work together to move this monetary system towards a new phase, and we have debt restructurings and a gold revaluation, we might have a relative easy transformation in international monetary system. But now we have this confrontation between the West and the rest of the world. Mm-hmm. And the BRICS conference is a great example of that. The great question is, to your question, who will move first? Who will start to back its currency by gold first? And it was no surprise to me that the Russians started to leak that story that the BRICS currency would be gold backed, and it was no surprise to me that 𝗠𝗘𝗟𝗗 started to write that we're witnessing the birth of this new monetary system coming from the East centered around gold and commodities, because there are very few steps you can take as central bankers, as world leaders, to rescue this monetary system.
Right, and in your book, you discussed how over 200 fiat currencies have failed throughout history. You cite very clear examples of that. What was very interesting as well is how you cited very clear examples of central banks manipulating the gold price, suppressing the gold price. So how does this fit into the BRICS idea. Is this happening now? Do you think we're seeing an intentional suppression of the gold price to allow central banks to accumulate gold, especially considering we're seeing record purchases of central bank gold? How does this idea that you've cited has clearly happened in the past of suppression of the gold price, how does it fit into this current narrative?
Well, there's this old wisdom, geopolitical wisdom. He who has the gold makes the rules. And I think countries like Russia, China, but also the US understand this very well. So this was the reason why the US could start with the Bretton Woods, the dollar system in 1944, because they had amassed most of the physical gold holdings in the world. They kept 20,000 tons of gold. They lost half of it, or even more in the 1960s, because the dollar was still convertible for gold at that time. And now China and Russia understand when you have a mass amount of physical gold, and the Chinese have been very active to accumulate as much gold as possible. There are some rumors that China has total gold holdings of around 20,000 tons nowadays itself. So it would be very easy, or it would be possible for the Chinese to make their currency gold-backed. They could use their gold holdings and join forces with other BRICS countries. And especially when they start to make a connection between oil and gold and start trading, they could use the BRICS alliance as a new kind of OPEC and demand that oil needs to be paid with something else than the dollars, and that it could be gold connected or gold linked. And we don't know what will happen, but there's a huge risk. And I think the Chinese and Russians and also the Saudis understand this very well. And there's a real risk that the gold card will be played one day.
Right. And yet we're not seeing this really reflected in the price of gold right now. I mean, again, certainly no movement in gold on the news. And I know that's a very short-term outlook, but why is gold not moving on any of this?
Since all these countries have been accumulating gold since the great financial crisis in the last 10 to 15 years, it was China's wish to not see a very rapid rise of the gold price, because the Chinese have made very clear to the US that they wanted to accumulate as much gold as possible for reasonable prices. And I think we're reaching a point now where countries have accumulated so much gold, they might feel they have enough, and now it might be the time for some of these countries to want to see a much higher gold price. So the revaluation of gold is, according to my thesis, and I worked that out in the Big Reset, is just a matter of time. I had expected it to happen a bit earlier, but I expect a very strong move for gold and silver in the next 5 to 10 years, within 5 to 10 years, because of everything we just
right.
discussed.
How strong a move for gold?
Well, if you look at history, you can also look at the ratio between gold and the amount of fiat money in circulation. We've seen gold readjust and revalue much higher. We've seen that in the 1930s. We've seen that in the 1970s. We've seen that between 2000 and 2011. So once gold starts to run, and especially in a revaluation scenario, it will go up 5x, 8x, 10x. So expect gold to move to 10,000. It might move to $10,000 or even higher.
Over the next 5 years is what you're saying. Between 5 and 10 years. We'll give you 10 years.
It's very hard for me to envision a scenario where gold will not be revalued to a much higher level. And based on everything we know from the past and what we've learned from history, I think it will be very easy for gold to reach $10,000 because that's only 5x.
Yeah. So $10,000 gold in 5 years' time, or between 5 to 10 years' time.
Yeah, look what happened after the end of the London gold pool. Central banks have tried to manipulate gold in the 60s. They were very successful. They wanted to keep gold fixed at $35 per ounce, which was the agreement from Bretton Woods. Well, this gold manipulation failed, and the London gold pool, which was a joint effort by Western central banks, the London gold pool collapsed in 1968, and then in 1971, the dollar was taken off the gold standard. What happened with the price of gold? It went up from $35 to over $800. So it went up 20x, 25x.
Right.
Well, what was the lowest price for gold in recent history? That was around 2000, was $250 for gold. Well, do it times 20, then you reach $5,000 for an ounce of gold. So that would be the same kind of move. If you look at the amount of money in circulation, M2, if you use these numbers, you could end up with $10,000, $15,000 for an ounce of gold. So if history is any guide, and gold will be revalued again to save and support the financial system, and never forget that the central bank balance sheet really benefits from a higher gold price. So that's why I think that longer term, you should move to, let's say, a range between $5,000 and $15,000.
Right. No, it makes sense when you break it down that way, Willem. Willem, finally, as we wrap up here, last time we spoke, you discussed your portfolio allocation. You said that you were allocating heavily to gold, but also to Bitcoin as a hedge. So what is your current portfolio allocation, and what are your thoughts on Bitcoin in there?
When I'm talking about my own book, my personal
your personal portfolio, yes.
My personal portfolio, it's still the same. It's 25% precious metals, physical, 25% in equities, which I invest in, let's say, my own fund, 25% in real estate, and 25% in, I keep cash / Bitcoin. So I adjust over time the amount of money invested in Bitcoin. And I still stick to this model portfolio. It's very easy to remember. It's very easy to spread your wealth over these 4 type of assets. And it has worked very well for me. And I can sleep very well at night by having this diversified portfolio.
Within that 25% allocation to cash and Bitcoin, as you say it, how much of that is Bitcoin?
At the moment, it's not that large because we're still in a downtrend for Bitcoin. I think we're in a bottoming phase, but we're not out of the woods yet. So when I see that there's a strong new uptrend, I will increase my position, my weighting into Bitcoin. But I have quite a bit of cash.
Right. And, you're one of the people that we bring on the show that is pro-gold and pro-Bitcoin, which is seemingly an idea that some people are at odds with. Personally, I'm like, why choose? Have both. Both are very good hedges. Both are very good store of value assets, and both would protect against geopolitical risk. So make your case very quickly as to why you have both gold and Bitcoin.
Well, I coined Bitcoin digital gold in the big reset in 2014 in the Dutch edition. It's not in the international edition. I was a bit stupid to not mention Bitcoin in the international edition. But for me, Bitcoin is digital gold because you have this scarcity, you have the limited supply of maximum 21 million coins. I think we have a new asset class which are called digital assets. And it all started with Bitcoin. So for me, gold is the nucleus of the world of commodities. Gold is the nucleus of the physical commodities, and Bitcoin is the nucleus for the new digital, the world of digital assets, and it will always stay that way.
Okay, we're going to leave it on that note. Final thoughts, Willem?
Well, we covered a lot of ground. So I don't know what more to say. Well, maybe one little topic, because we haven't touched on silver. And there's always a lot of interest in silver. And when I say that you should put 25% of your net worth in physical metals, in precious metals, what I try to do myself, I have much more silver than gold, because I think silver has the best risk-reward ratio of all metals. Silver is trading at 50% of its 1980 high. It's the most undervalued commodity for me. So when I talk about gold, you always should add silver to that as well, because if gold will be revalued, silver will be revalued as well, because there's this strong connection between these two brothers. And there's also less risk of confiscation, because people are always afraid for confiscation, gold confiscation. It never happened in Europe. It has been forbidden for people in the US to buy gold between 1933 and 1974, I think. But silver that's just a small market. Nobody cares about silver. So I think silver is a great investment.
All right, that is a very useful final thought. So thank you for sharing all of that insight with us. Willem Middelkoop, really appreciate it. Thank you again. And I look forward to your new book, The Big Reset, BRICS edition. Definitely going to be reading that one. Thank you again, Willem Middelkoop. Thank you all for watching. And a big thank you to our sponsor, Meld. To our viewers, Meld is a decentralized global bank providing cross-chain lending, borrowing, and staking. And there is a special offer for Kitco viewers in the description of this video, so make sure to check it out. For me, Makori, and the rest of the team, we'll see you soon.
On the Spot with Makori is brought to you by Meld, the next-generation multi-chain crypto wallet that allows you to unlock the value of your crypto without liquidating your position. Undertake easy cross-chain transfers, yield, and borrowing by handling your crypto and fiat processes with transparency. Transfer fiat to and from crypto exchanges at low cost and in 15 currencies. Meld, your one account for money and crypto at your fingertips.